Dear class, in the second semester we have a learning content for the second semester that will cover one of the topic will be departmental accounting. In this departmental accounting, we will explain the meaning of departmental accounting and the purpose of having this departmental accounting, and how the cost will be allocated into different departments, and also to prepare income statement from a department. And this is just to highlight that when we prepare a department accounting, is some business which has one organization but run by having a different department or different units or different section, as the name may be called. But they would like to prepare each section or each department to have its own financial activities that are very distinct from the other departments. So we'll cover that department account. But again, we cover those organizations which has a more operating with the branches. They may be operating with the headquarters located somewhere and branches in other area. So in this case, we will look for to explain branch accounting and the purpose of this branch accounting, and explain type of branch accounting, and how the centralized branch or decentralized branch account may be prepared, and also to prepare stock adjustment account for branches, and therefore we will prepare financial statement of head office. And again, we prepare current remittance account for decentralized branch, and therefore we'll end up prepare financial statement for the branch. Dear class, topic also will be the effect of changes in the foreign exchange rate, and how this happen. This happen when one organizations are operate with more than one currency. So find out that they may be selling goods on credit, but the currency may be different. They may be operating in Tanzania, but they are selling goods to Kenya, and maybe they're using a US dollar, or they are using Kenyan shillings. So those assets like debtors, they may be vary depending on variations of exchange rate. So we will see how function recognition of foreign exchange rate, the explain disclosure of exchange rate, and the report exchange rates that end up subsequent reporting period, recognize exchange differences, and to translate presentation occurrence if it's happened that a function occurrence differ with the presentation occurrence. Presentation occurrence is the currency used to prepare financial statement, where it might not be the function occurrence, which the most activities are done with this function occurrence. So another topic number 4, we will cover account for contract. This account for contract is a situation where the contract take more than one accounting period, and these are covered by International Accounting Standard in number 11, and this will explain the component of contract revenue and the recognition, how the recognition of revenue and the costing, and to determine a percentage stage of a contract completed, and then prepare a contract account, and therefore will end up calculate a profit or loss from the contract. Again, number 5 will cover account for lease. So So account for lease, these are where, as we know that the capital assets sometimes require heavy investment, and therefore some may decide not to buy those assets. Instead, they make a lease. So generally we have two types of lease. One is operating and the financing lease. We will see it later on. So we'll explain what is a lease, explain the purpose of lease, and also we'll end up explaining a feature that differentiate operating from finance lease. And we'll show also account for operating in the finance lease, and the disclosure of accounting for lease. And the topic next will be a joint venture. By joint venture, we will cover, explain the meaning of joint venture, explain the purpose of joint venture, and prepare joint venture accounts, and prepare memorandum joint venture account. Initially, let me introduce only that the joint venture result from a short-term business undertaking. They join hands in order to undertake a certain venture only. So maybe they join hands so that they can buy a house and resell it. And the only one transaction when it sees that they're going to end up co-venturer, end up that business. So this is will be covered also. We call it a joint venture. Firstly, we cover consignment account. By consignment account, that is only extension of the business where the one party send goods to be sold by another. It's some sort of a principal agent relationship, that the consigner sends goods to consignee, so that when the consignee sells those goods, they make a remittance after deducting a certain fee. They call it a commissions. So we will explain the consignment, explain the purpose of consignment, and also we prepare consignee and the consigner account. We will end up preparing a consignment account. So this will mark the end of our second semester module. We cover those 7 topics that will start early next week. Thank you very much.